Well, stocks are officially open for trade, and we see decent gains across the board, fractional gains for the major indices, that is. That is after the inflation report for September came in a little bit below economists' expectations, and that's a good thing, likely paving the way for a Fed rate cut next week. Joining me now to talk more about the markets is Ryan Detrick. He's the Chief Market Strategist at Carson Group. Ryan, always good to see you, especially on a day like today. We finally got this long-awaited CPI data. What is your reaction as the market gains?
Well, Kristen, thanks for having me back, and happy Friday to everyone. So it was a delayed number, but maybe it was worth the wait. You know, as everyone's talking about, it came in a little lower than expected. I've had a little time to dig in. I think what stood out to me was the shelter data. Shelter data is really starting to come down, like owners equivalent rent and shelter and those parts of it really showing some drops. And as we talked a lot about, that's a big part of core CPI, and that's that's a big positive, I think. All in all, what's it do? Well, it means the Fed's going to cut 25 basis points next week and probably opens the door for one more rate cut in December. And we think some more coming in 26, but that's why we're rallying, obviously, today. Or we're just rallying because it's a bull market. That's the other reason. But, yeah, a good day for investors.
Yeah. I want to talk more about your investment thesis, Ryan, if it has changed at all amid what had been a re-escalation of trade tensions, of course, a delay in some of this data amid the shutdown and earnings season, with a lot of these reports, by and large, coming in above expectations.
It really has not changed. I know, come on to you for a while. Carson Group's been out there. We've been overweight equities for 3 years now. That wasn't very popular a couple of years ago. It's a little more popular now. We don't see too many major changes. Yes, the government is shut down, second longest shutdown ever. I mean, the 2 weeks ago today was that 2.7% drop in the S&P 500. Everybody freaking out because, you know, President Trump's not going to meet President Xi. But I think more important, Kristen, is what happened last Friday. All these things happened on Friday, apparently. VIX popped up right around 29, yet the S&P 500 closed near an all-time high. That is super rare. I went back and only saw that happen 2 other times in late 1998 and after COVID in 2020. Not the worst times for investors to be bullish. And then add a cherry on top to that. The VIX on Friday of last week and Monday of this week was down 10 points from the high to where it closed. That is unbelievable drop in volatility. I hate to say it's an all clear signal, but when I looked in history, yes, that looks like an all clear signal. We manage a lot of money in the Carson Group. Just this week, we added a little bit more equity, hard to say on a Friday, equity risk, expecting to see a pretty solid end of year rally, and we think it's starting.
Okay, and let's talk about what would drive that end of year rally. Obviously, seasonality might be at play here, Ryan, but we are expecting the Fed to cut interest rates by 1/4 percentage point next week. How does that set up equities for the position that you anticipate into year end?
Well, quickly on seasonality, I mean, we're all going to hear a lot about this, but November is the best month of the year. It's like the best month the last 10 years, second best the last 20 years, third best in a post-election year. You get the picture. Calendar is a tailwind. But we've taken a look at this. When the Fed cuts interest rates near all-time highs, and who knows where we'll be next week, good chance we will be. But back in September, they cut with near all-time highs, Kristen. What's that old saying? Don't fight the Fed. 22 times they did this. 22 times a year later, S&P has been higher with some pretty good returns. But one more thing on this, it's earnings. I mean, I think what's really going to drive us is the realization that all this recession we keep being promised, everyone keeps telling us how there's supposed to be all this inflation because of tariffs, and there are pockets of it. Look at today, right? Home furnishing went up a little bit, apparel went up a little bit. Yes, that's being impacted by tariffs, but overall, we don't see massive inflation. We see strong earnings growth in an economy that continues to defy most economists, and that is why we are at all-time highs and probably going to have a few more over the next 2 months to end out a really solid 2025.
Yeah, we've seen more than 30 all-time highs this year for the S&P 500. It is pretty impressive, right? I want to talk to you about sector strength, what you're seeing. Obviously, we've seen this AI trade since that quick April low really lead a lot of the gains.
They have. You know, the way we put it is kind of stick with who brought you to the dance. We still do like large caps. We like technology. We like telecommunications and telecom communications, I should call that. Also industrials, financials. We like those areas, those cyclical areas. We actually just this week added some metals and miners as well. We have had a little bit of gold. Gold's pretty darn extended. I think most of us agree, but some of those metals and miners potentially might take the baton from gold. So really those cyclical areas where we are. One final comment, we do what we call like a barbell approach. We got got low volatility on one side and momentum on the other. We've done that all year. That's a nice way to kind of be hedged. So for someone who wants an easy way to kind of not be too caught up in, a bull market or bear market, if you hedge yourself with barbelled approach on each side, low volatility momentum, that's done really well this year, and we're still positioning our portfolios that way.
All right, Ryan Detrick joining me remotely this morning. He's the Chief Market Strategist at Carson Group. Ryan, thank you as always.
Thank you for having me back. Happy Friday, everybody. Have a great weekend. Thanks, Kristen.
You too.